Yeah. Hello, everyone. Good day. I greet you. Definitely, I'm sure you know my name by now. But for those who don't know my name is Kazim. I'm a forex trader, strategy developer. What I do is I develop strategy for trading forex. I don't just trade the forex market. I develop various strategies trading forex. So, what if you know that is your main aim? You want strategies, you need strategy to trade the forex market, be the currency, the stocks, the bond, the volatility market, which is a binary trades. All we do is create strategy for it. So if you're new to the channel, check down below here. You're gonna see subscribe. Click on the subscribe button there. Beside it, we see a bell icon. Click on the bell icon. That way you get notified whenever we post any other video. And also, after watching this video, if it's helpful, I usually say don't just click on the thumbs up. If it's helpful, that's when you click on the thumbs up. And if it's not, click on the thumbs down. That will be able to communicate and know how far we are going with the strategy. And still in the comment section, if you have any information, if you have any question, you're free to ask me. I will answer you as soon as possible. So I wouldn't like wasting much of your time. Just go straight into today's video and what we'll be discussing today. Today we'll be talking about how to trade the volatility market, how to trade the boom and crash market in a long trend. Like how do you trade it? Because most people feel boom and crash is a 1 minute something. Just use 1 minute. You can't use like the 15 minutes, you can't use the 30 minutes, you can't use the 1 hour with the 1 hour to trade it. Actually, that's not the truth. You can actually trade the boom and crash with the 15 minutes, with the 30 minutes, with the 1 hour, with the 4 hours. The bet, what you should know is you using a higher time frame depends on the trading account. You are like the trading capital in your account. You shouldn't be having maybe a $10 account or a $20 account. Then you want to be using 1 hour time frame to trade the boom and crash. Why you shouldn't be doing that is because a little movement, because remember when using a 1 hour chart, each candle represents what happens in the whole of 1 hour. So you might be seeing an uptrend in an hour. They feel like, okay, fine, this is a buy. Remember it's a boom market, so you be like, we find this is a buy, we get more boom, more spike. But before you get that more spike, you might be having little ticks. That little ticks might go for at least maybe 20 minutes, 30 minutes, which at times is enough to blow up your small account. That is if you have a good account. So that's why I say before you use a higher time frame, you should know the amount you have. If you're like you have a $10 account, you shouldn't be thinking of using 1 hour chart or using 30 minute chart, because even a little pullback in the 5 minute chart is enough to blow up your account. That if you're not careful, like if you don't use your good risk management, if you don't use your stop loss. I always say it. Most people say stop loss don't work on boom and crash. You can't use stop loss or boom and crash. When the spike comes, it doesn't obey stop loss. Yes, the spike doesn't obey stop loss. But why I still tell people to use stop loss? Because if you put the stop loss after that first spike, it will be taken out of the market without loss. I usually say this: it's better you leave the market with a little loss than you feel like, because naturally the human mind, when you get a loss, it be like, okay, fine, let me just wait first. Probably maybe it will spike again. It will not be tick until I'll start making my little profit. But unfortunately, you'll be surprised it keeps spiking. But assuming you use a stop loss, once it spike, it will, once it touches that your stop loss, anyway that spike stop. I'm not saying maybe it will stop where you put that your stop loss. If the spike passes your stop loss, only the amount which the spike carries. Let me say maybe the spike is like a $4 account, a $4 spike, or a $5 or $6. That amount will be deducted from your account, and you leave the market automatically. More like when you say you want to do it manually. Manually, it's fine. As a human, nobody may want to lose his or her money. So you always feel like, let me leave it a little. Probably I'll be in profit after some time. But before you know it, that's how a lot of people end up blowing up their accounts. You understand? Okay, fine. I'm sorry if I'm a bit fast. Okay, I will try to be a bit calm now. Okay, so now let's go straight into today's strategy. I'll be using the 15-minute chart to trade the boom and crash. How do you trade it? For me, I think using the boom and using the 15-minute chart to trade boom and crash is a bit easier. Why? Because you can see a bigger market. Like I can see a bigger proof of the market. Because if you're using the 1 minute, let's still go to the 1 minute. If you're using the 1 minute time frame, what you see is just the ticks. I'll be like, okay, I want to take like 2 ticks. I want to like take, okay, now let's assume the market is somewhere here. Let's assume the market is somewhere here. Then how do you know if the spike is going to spike more, or it's going to be more of 6? There might be some strategy maybe you've seen. Definitely my past strategy that tell you how to take the ticks, how to take the spikes. You can still use any of them. They are still working. Remember, this forex market is to find what works for you. If you get something that works for you, use it. Don't say because you've seen another one, you want to leave the one that works for you, then Everyone just, you can improve on it, like try to improve on the one you have, but don't try to entirely leave it. And if you're doing that, you'll be what we call a rat race, because there's no strategy that's 100% profitable. Just look for the one that's good for your system. So now, what you're doing now is what you have to use the price action to trade the boom and crash. So let's just go straight. First, if you don't know what's price action, or you still need more lesson on trading forex market, we'll be having our class. I'll be starting another class which is for trading the general forex market. We start from the basic class to the intermediate to the pro class. Then we'll also be going to the EAs and software development and how to use them. So if you're interested, my link will be down, my number will be down. Just contact me. I'll give you how to join the class. Actually, the first class, which is the basic class, is free for everybody. Actually, the third class we are doing, we've done the first one, we've done the second, which is free. We taught everyone free. But for this third one, we would like to do it. Just the basic class will be free. Then after the basic class, the others will just be $5. And why I make it $5? Because not because we really need the money, because we need people to pay attention. Because we notice when I give people something free, they feel like they just come to the class anytime. Class start by 6 p.m. and you see some people coming around 9 to ask you, sorry, I didn't get what you said around in the class. That's not done. But if they are paying for it, I think they will see more value in it. If you say 6 p.m., 6 p.m., they'll be there to enjoy what their money is working for them. So that's why I just put in that $5. So if you're interested, just my link is down below. The basic class will start next month, which is October. Then after that, we'll go into the intermediate, we'll go into the post class, we'll also go into the EAs and software development. Okay, fine. So let's go into price action. I won't be explaining what's price action. I believe you know. If you don't, you can still join my class because it's not something I'll just tell you fast. Okay, let's say this is a good trade now. I think, okay, this is a small account. I think this, yeah, you can see this is my real account. So I'll be trading today on a real account. This is one of my smallest accounts. Okay, now looking at this now, what do you do here? This is a downtrend on a 15-minute chart. So let's say you're gonna use something like this. Oh, sorry. Remember using the 15 minutes. We pick this. Then we pick this. This is the trend line. We just want to know, as you can see it. Okay. Okay. Let's go down here. All I just want to know is this market is currently on a downtrend, but it just broke the trend line. So what I'm supposed to do in this market, in this case now, for me, it's supposed to be in uptrend, but you only look for what in up position, which is what you look for an opportunity to buy the market, not to sell this market. So that's how you use price action to trade this. Once you do the 15 minutes, you just follow what the current market is doing. Remember, I said initially, you don't use 1 hour because a lot of people you go into 1 hour to see what happened. Okay, this is an uptrend in 1 hour. You go into 4 hours, say downtrend. You go into daily, see an uptrend. You get confused. You be like, which one will I follow? The one you follow depends on your trading account. Okay, let's go into 1 hour and see what's happening there. Okay, this 4 hours. Let's just go into 4 hours and see. Okay, in 4 hours, this is a downtrend. But remember, in 1 hour, it's already broken our trend line. So if you don't have a lot of capital, and it comes to 4 hours, it'll be like, okay, this is a down trend. They put a sell. Before you know, you might be having some spike, and before you know, you're out of the market. So as I say, what you use depends on the trading account which you are, which is your trading capital. If you don't have more trading capital, use the 15 minutes. I say use the 15 minutes because if I say use the 5 minutes, the 5 minutes is still giving you ticks. More like you see more of ticks. You don't really see much of the market. You don't see more of things happening in the market. But if you use the 15 minutes, as you can see it now, you're able to see more of what happened in the market. Now I've got a trend line. You see it has broken it. So what do you expect? You wait for the market to get back to this trend line. Then put a buy with your stop loss right below this trend line. You don't just put it very close below this trend line. You put it probably somewhere here. Let's say somewhere here. So that's why you just put your stop loss. Okay, so that's this. You can use this strategy for all the market. Like I use it for all the market. Good, exactly. This is what I just said. As you can see it now, what just happened? The market has spiked. Assuming you went to 4 hours now and saw, okay, this is a down trade now. And you put a sell on it, and you're having a small capital. Before you know what's happening, a little spike will be happening in 15 minutes, in the 5 minutes, in 1 minute, which is enough to blow up your trading account. So that's why I say you always use the 15 minutes so that you can see a bigger picture and you can still take more pips in the market. You can just start to also trade the volatility. So long as it's volatile, just consider what is your trading account. You don't trading the volatility, because that's why most people tell you volatility market is too volatile. Before you know, you're losing $10, you're losing $20, you're losing $100. That's because okay, I trade mainly volatility 75. I see the 15 minutes or the 30 minutes to trade this. Why do I do that? Because my trading account is like, how would I put it? You don't use 1 hour, you don't use 2 hours when you know you don't have a good trading account, you don't have a good trading capital. You put money you can afford to lose in your trading account. You don't go to the bank and borrow money then use to start trading. So if you want to trade, use a good, let's say, a good time frame. No best time frame. The time frame depends on what is happening in your trading capital, and again the volatility of the market. If it's very volatile, like the volatility index, the boom and crash, the step index, you don't use 1 hour, 2 hours when you know you don't have a good capital. It's better use a small time frame so you can see what's happening in the market, because just a little peep is good money already for you. It's something good. So you should consider your trading account, also consider the volatility of the market. Assume it's currency now, they can use, okay fine, I can use maybe the 1 hour for the minor currency, then the major currency you can use. Okay, so you can use the 1 hour for your major currency because they are volatile, then the minor currency you can use the 4 hours. But today we are considering mainly the volatility market. Because of the volatility nature, we'll be using what, the 15 minutes. So how do you trade the volatility? Still the same thing. It's a down thing there now. So what do? You look for only down opportunities. And you must remember, you must use your stop loss. So your stop loss must be somewhere above here. Let me say, okay, this is it now. For me, at this point now, I don't say trade. Why? Because it just broke down here. It just broke this. It just broke. Hold on, let me show you something. I saw this earlier, but I didn't really know when it's broke it, so I was not. So I've already lost this market. Don't be scared of losing markets. You lose some, you win some. So long as you're making your profits, be satisfied. Don't say, okay, now it's on a downtrend now, so I just want to sell the market. You can sell and make profit today. You can do that and make profit tomorrow. But if you're not careful, the day you'll be making loss. If you don't manage very well, you might end up wiping out your entire account. Assuming you miss something like this now, like when it's still in this down range, they can, okay, once it's break it, it's gonna be on a on a down sell. So that's just it. So you can use this strategy to trade anything. So long as it's volatile, use your 15 minutes, use your 30 minutes. Don't use a big, like, 1 hour to trade the volatile market, because you might end up blowing up your account only to you feel like the market is against you. Meanwhile, you're the one going against the rules of the market. Okay, once again, before we end this video, if this video is useful, if you find it very helpful, please give it a thumbs up. If you have any question, any suggestion, you can still check below. You see the comment section, just drop it. I will answer you as soon as possible. I'll send a reply to you. And again, we'll be having our forex class, which is the Forex Network 3, which will be starting October. So if you want to join, it's actually free for the basic class. Then for the intermediate, the pros and the EEs and software development class, you pay just $5, which covers the intermediate, the pros and the EEs and software development. So if you're interested, you can check my link below. My number will be there, our email will be there, and everything. You need, just contact us. We will give you the needed assistance to make sure you become successful in this trade. Remember, this is a market where the fact that you're making profit does not affect my own profit. If I know what I'm doing, we all can make our profits. So no matter how much you make, no matter how much I make, it does not really affect what you're making. We are going to teach you to make profits. So you can contact us for any advice, any information you need. We're always there for you. Thank you so much, and once again, welcome to my channel. See you in the next video. Bye for now.